Crypto volatility may be causing problems for institutions and retail investors, but is it actually a good thing? Well, according to Citi's global head of markets, it could in fact be your friend if you can trade it right. Let's talk about how in more detail with Damian Lowe, CEO of Matrix Asset Management. Great to have you with us as always, Damian.
Thank you for having me, Joel.
Let's talk about trading volatility then. Proshares has launched a short Bitcoin strategy ETF, potentially a new tool for crypto bears. What's your take on that?
I think it's inevitable, and I think it was definitely Proshares, given that they were out of the gates faster than everybody else to actually implement it. If anything, I don't think like most retail people would use it overall, but it could be for more institutional type players. The reason for that is that perpetuals serve a very similar purpose on the centralized exchanges, and that has been around for quite a few years already. It's probably gonna be having quite a bit of popularity right now, given the bearish overall sentiment and market. And I think it's a useful tool for institutional people to feel more comfortable to engage in the space. So overall, I think it's great for the overall growth of the space and the industry to have a short instrument, especially something that's exchange traded.
We mentioned the huge withdrawals of Bitcoin over the last couple of weeks. Prices seem to be steadying around the 20,000 mark. What levels are you watching?
So I think it's always really hard to predict specific price movements. The very natural ones are always the round numbers like 10,000 and 15,000. We're starting to see also some of the Bitcoin miners where their break even is around here or slightly lower. And we're also seeing some of the LTVs, hitting 100% on some of the lending platforms. And that's tying out to about 18,000 or 15,000 or so in price for Bitcoin as well, very roughly. So I think, it could have a slight dip lower or stay around here. We will have to see broader markets to really understand whether Bitcoin has dipped overall. And that is in turn based on the Fed and whether we see better inflation data, whether Yellen and Biden decide on whether they're going to reduce some of the Chinese tariffs. And if so, then we could start seeing a base out in Bitcoin and perhaps even a slow grind up overall.
In terms of Bitcoin price falls, the Purpose Bitcoin ETF saw about $500 million in outflows just a couple of weeks ago. Can you give us an idea about why we might be seeing these sorts of outflows and whether in fact they could ultimately be destabilizing?
So I think it's very natural to see outflows, especially in a bearish market. What is really important is to see if the outflows was outsized relative to the outflows in the other asset classes, and in which case they were not. I don't think they are a driver of the move lower in prices, but more of a symptom of what the prices has done recently. So I don't think it's really something that we can blame, and it's really just more symptomatic overall. It's still very important to have these instruments that are exchange traded, a lot more liquid, and within the mandate for a lot of institutionals as well to trade. That helps to overall grow the whole industry. And so yes, it's more of a symptom, not really something that drove the price action overall.
All right, thanks so much for joining us today, Damian.
Thank you, Joel.